sent me really stuck out.
Yeah.
Should someone turn down a raise ever due to tax concerns? I'm assuming going into a new tax bracket.
Yep. Absolutely. Yeah. I think this is an interesting question because I feel like I have experienced people asking me this, more so like family and friends over the years, not necessarily the clientele that I've worked with when I was doing taxes. I think people just inherently think like, oh, if I take on a new job and a new position that pays more, that's going to put me, based on the salary amount, into a different tax bracket that's higher, right? And they're, in their mind, they're thinking, oh, I'm going to make less money even if I'm technically earning more in a salary.
Right.
And so I think it's just explaining to people that based on kind of how the income tax bracket works, for us in the country, is that it's a progressive tax system, right? So that, income within the tax brackets gets taxed at that level. So it doesn't necessarily mean that because you're making X amount and you're in this tax bracket, that 100% of that income is being taxed at that, whatever that rate is.
Because I've heard some people say, oh, I'm about to hit this dollar amount. I need to somehow avoid not doing that.
Right. And there is a strategy to that too, right? I mean, I think there's things that you can do to kind of reduce your taxable income so that you aren't hitting whatever, bracket you don't want to hit. But I think people forget that, like, each tax bracket, that's the amount of income that you're going to be taxed at for that amount. And then, it just goes up in increments from there.
Gotcha.
Yeah.
So don't take a demotion.
No, please don't. Don't listen to any men telling you to take a demotion for tax reasons or otherwise.
Oh no, don't take that position, babe. Don't take it.
No, please just, no.
Oh man. Okay. If someone has HSA, are those helpful for tax advantages?
Yeah. So HSA is kind of what we call like the triple threat in the tax world. Just because, contributions that you're making to that end up being, reducing your taxable income, if you will.
Gotcha.
And then like the money that you're putting into an HSA, not only, there's also the piece that you like don't have to spend it each year like you do for an FSA, so it can continue to roll and grow. That money that you're putting into an HSA you use for health related expenses, right? But that money is getting invested into, some sort of an investment account so that it's appreciating over time.
Oh, wow. Okay.
And you're not getting taxed on any of that appreciation or growth, if you will. That is happening in that account.
Real quick, man, just a world HSA, just in case we lost you and you don't Google it, health savings account.
Yes.
A lot of employers offer, not all of them.
Yes. Not all of them offer. I wish they did. But yeah, super efficient tax tool. And again, like healthcare costs in this country are not going down. And so that's something that you can continue to carry, even if you leave the employer that you are with that has that account.
Really?
That you hold it with, like you can continue to have that account into the future. So
that's what helped me buy these glasses.
Oh, well, there you go. There you go. You knew. You knew.
What are some itemized deductions examples that can add up quickly? Medical, we just crossed, it sounds like.
Yep.
Anything else that someone can?
Yeah. So for the medical stuff, I mean, a lot of people, especially younger, people don't necessarily have a ton of medical expenses unless there's some crazy event that happens in their life. But a lot of times I would see that for the older, population, where if it exceeds a certain percentage of your AGI or your adjusted gross income, if you will, then you're able to deduct that as an itemized deduction. But I would say the more common ones that you would see would be like mortgage interest. So if you buy a house, any of the interest that you're paying as part of your mortgage payment each month, that is technically deductible as an itemized deduction. And then also any like state or local taxes. So that would be like, in Oregon, any Oregon income tax that you're paying, which again, depending on how much you're making, can be a significant amount of money. The other one that not necessarily everybody really hits often is like charitable deduction. So if you are contributing a lot to charities or making donations,
even church, I heard.
Yep.
Doing your tithes.
Yep. That can add up quickly depending on how much you're making. Again, it's just a matter of whether those itemized deductions exceed what the standard deduction would be. So, yeah.
What about retirement accounts, IRAs, traditional IRAs, Roth IRA?
Yeah. Yes. So, there's two differing thoughts here. Obviously, a traditional.
There is.
Yeah.
I compare it to Bloods and Crips. Personally, that's just how I understand it.
Oh, okay. Okay.
Sorry, I'm
Yeah,
sorry.
Yeah.
One's more aggressive than
I
the
don't know
other.
that I've heard that analogy
It's just
before.
where my mind goes.
Yeah. Okay.
That's
That's
why
fair.
I do this line of work.
That's fair. So with the traditional 401k, obviously you are getting to reduce your taxable income for any contributions that you're making into that account when you do it. But then when you withdraw the funds later on, when you've retired, that becomes taxable at your whatever your effective tax rate is at the time.
Because it wasn't taxed
initially.
Right. Got you. Where I'm assuming Roth it's taxed as you put it in.
Yep, it's the inverse. So you're using after tax dollars to contribute to that 401k account. So therefore, then any appreciation that happens in that account over time, you don't end up getting taxed on. So the only little caveat to that is that there are usually income limitations for all of these things, how much you can contribute. And for Roth IRAs specifically, not Roth 401ks, there is actually there might be a limitation for 401ks too. I'm questioning myself, but income limitations. So like once you hit a certain point in your, earnings, there becomes a phase out so that you can't contribute as much or you can't contribute at all. Like you don't qualify to be able to contribute to the Roth.
So it's kind of the way for the rich don't get richer if they're putting in like a bunch of money and just the interest is.
Correct. There is a strategy called a backdoor Roth that you can do whereby you contribute the money into like a traditional account and then immediately transfer it to a Roth. And so that is oftentimes used for higher income earners that are over that 401k, that Roth 401k threshold. So there's options that you can still do, but it just sometimes becomes a little bit more complicated the more and more that you're making each year.
So guys, what they're saying, if you work in a job and they offer you a retirement account, like use the retirement account. Don't let that little $100, $200 a check. Don't think you need to buy something you don't need to have. Contribute to it.
Yes, do that. Especially if your employer offers a match too. That's oftentimes what I see people getting about too. Is like, oh well, I don't want to take the $100 out of my paycheck just to get the match from my employer. And it's like, okay, but that's $100 match that is like free to you and gets to appreciate over time. And it's costing you nothing other than also helping yourself by contributing the amount that you need to get that match.
One of the best decisions I did. Shout out Ryan Liu. Ryan Liu's supposed to be on here. He's a financial consultant, and he used to work with me. He's like, bro, do the match.
Yes.
Do the match and I fought him. I was like, I can do so much with this money each check.
Yeah.
No, I'm so glad I took advantage of that.
Yes.
So glad.
Yes.
Best choice.
It is. Yes, absolutely.
Especially all those years adding up, you have something to show for the time you put in, regardless what you do with it.
Well, and I think younger people too, it's like they think, oh, like I'll deal with retirement once I get older and as I get closer. And it's like, but you're losing out on so much valuable time and so much potential to appreciate by like just, and honestly, like just do it, because then the money's like out of your paycheck and you don't even see it, right? And then you just learn to live within the means of what you're getting.
Absolutely.
And I think there's such a valuable lesson there. And then it's like out of sight, out of mind. Like it's doing work for you while you don't even have to think about it.
Exactly.
So,
I mean, how many times I know you and I can count numerous times that people make more money. Now their spending increases.
Oh yeah.
Just crazy.
Yes.
I know I've seen it. I've probably done it.
I'm guilty of it too. I get a little raise and I'm like, oh, like what can I treat myself to, each month now? So I get it.
I feel you.
We're not perfect.
I feel you. Oh, I like this one. The tax refund means you filed correctly and maximize your return. The reality behind tax refunds.
Yeah. So, I mean, I think this is all dependent upon your perspective, right? But I think for a lot of people, they do their taxes each year and they get a massive refund and they're so excited, right?
Right.
And rightfully
I
so.
am too.
Right, yeah. Like I love getting whatever refund back I can.
Better than the other option.
Correct. However, what I tell people is that when you're getting like massive refunds back from, whether it's the federal government or the state, I think what they miss connecting the dots about is that you have just lent the government money tax-free for a year.
Oh, what?
Right? Because they're not paying you interest on that refund that they have been collecting throughout the year out of withholdings or what have you.
Wow.
And so, I think there's a real benefit to really making sure that your withholdings are correct when you fill out your W-4, like when you're starting a job or tweaking them throughout the year, to make sure that ideally for a lot of people where they want to be is at like, netting zero, like in the perfect world, or having a very small refund or amount that they owe.
Gotcha.
Just because, again, if you can retain that money and like invest it into a high yield savings account or, a brokerage account or what have you, and let that earn so much more money for you than the government who's not paying you any additional premium for keeping your money throughout the year.
So you're pretty much saying they're pretty much just pulling the wool over our eyes. We think we're getting extra money back, but really it's money we overpaid.
Yeah. Money you overpaid with no interest component.
I'm gonna post this, but damn, that kills my buzz.
Yeah.
You got another bottle? Damn.
Yeah.
I'd be looking. I'm like, please be a plus. Please be. Now I'm gonna be like, it's money you already bid.
Yeah.
You should have just had through your day to day.
Yep.
Damn.
Yeah.
That's deep.
Yeah. So it's not something that a lot of people think about, but the reality of it.
I hear a lot of business owners complain about Oregon, having a business in Oregon, as far as tax wise.
Yeah.
So does it really vary state to state how beneficial or detrimental taxes are to your business?
I mean, absolutely. Like, I think there's just, depending on what state you live in, the tax brackets and rates are going to be different, and kind of also what your entity structure is too.
Because per somebody, I'll let him explain if he comes on here and talks about it, but per somebody is like Oregon, having a business in Oregon just sucks. Because
really high tax rates. Yeah. And I think people sleep on Oregon. I think, like some of the like big states that you always hear about are like California and New York, right? That have like super high taxes. And Oregon's marginal tax rate is actually really high, when you consider everything that you're paying and also the progression of the tax brackets. Like, I think our tax brackets tend to accelerate faster, if you will.
Gotcha. Yeah, I agree.
So like Oregon is a pretty high tax state, if you will. And also, it depends on, even within Oregon, like what county you live on or live in.
Gotcha.
So, like if you live up in the Portland metro area, there's a lot of extra additional taxes that you potentially could have to pay versus if you live in other counties within the state.
So compared to if you live to like Texas or Florida, I hear those are kind of a little more beneficial.
Well, so Texas and Florida don't have any sort of income tax, right? So they have sales tax, which we don't have.
Right.
But they're not getting taxed on any earnings that they're making. So there's, there's some pluses and minuses there.
Yeah. You really got to weigh that out.
Yeah. There's a lot of people like that are like living in Portland that end up moving over the state border to Washington because Washington doesn't have any, state income tax, right?
Does Arizona have sales tax?
That's a good question. I don't know.
They do.
I think they do.
I bought a Corona and it was a lot of money. It was. Sorry. It was like $15-17.
What?
For a Corona.
What? Are you sure you were charged correctly? Did you look at your receipt?
I'm a look.
You probably should, because that seems outrageous.
For one, I was at a club.
I mean, we're not talking like highfalutin beer here either. Like, ugh.
And I even told her, I said, there's this place out in my home called Dairy Mart. I could have had 12 of these. She's like, well, this isn't Dairy Mart.
Yeah. Wow. $17?
Yeah.
Wow.
I almost returned it, but she already cracked it open. So
almost returned it.
I did. Terrible position to be. It is. Oh, sales tax 5.6%.
I mean, that's pretty steep, but still $17. I don't know.
Terrible experience for that portion of it. The rest was great, but
yeah,
I was just like, damn.
Gosh, I can only imagine what like a cocktail would be there if Corona was 17.
Oh man, I don't know. We'll go find out later.
When we find our sugar mamas and daddies.
But yeah, that's okay. So that's interesting. What happens if someone doesn't file their taxes? I always wondered that.
Yeah.
If someone just says, "Oh, I'm just not even saying nothing."
Yeah. So I mean, the thing is like any job that you have, or even any like interest income from like a banking institution or like brokerage income, if you have like investments, they are like mandatorily required to report earnings for their employees or their members or clients, what have you, to the federal and state governments. So what, for instance, take like the IRS. So the IRS has, in theory, what they're doing is they're matching your reporting from your personal income tax return based on like the information that they are given from employers or institutions, right? And so when they don't see those things aligning, that's when there's kind of like a light bulb that goes off for them, and that's where people get notices or audits, things of that nature.
Oh, okay. So even if a business, some reason, well, I guess if you register your business, you're on the radar now.
Potentially, yeah. I mean, the thing is like not every person that doesn't file their tax returns is going to get a notice or an audit, probably, per se. I don't think that the IRS is that diligent. Like, not everybody gets audited in general, right?
Right.
They have whatever system they use to determine how they're going to pull the people that they want to audit. But again, like, it's obviously not recommended that you you because when they do find you, like, not only are you going to have to go back and file for all the years that you didn't, but there's going to be interest and penalties that are tacked on to any, either late filing penalties or like interest on any amounts that were due, and they add up quick, right? So it's just better to just stay in compliance.
We need to add a dream button to this. Lido will work on that. But this is my dream.
Yeah.
Just bloom, 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 bloom. I wish when I pay my taxes, I wish there was apps I can see or I can choose where my money go to. One of that, I do. Like, all right, Daz, look, we could do roads and schools. We could do help the local business. We could help this or I wish.
Yeah.
I'm just dreaming.
Yeah.
Instead of just, here's my tax money.
Letting them do what they will with your money.
Oh, man.
Yeah.
And that's me just being real with you. I wish I could just go, hey, Dad, you got to do this multiple choice. All right, roads and schools, small businesses. Oh, help this governor. At least I could pick where my money go.
Yeah.
Man.
Don't get that option, do you?
Hell no. I don't even know if I can find it. Someone technical might tell me I can, but I don't know.
Yeah. Yeah.
I know there's
a big sticking point for people because I think like you, they're like, they say how much is getting taken away from them. And they're like, but there's still things that are in shambles. Like, but you're telling me that taxes are being used to help this area. And yet they're not. So
what am I doing?
Yeah.
So I just wish I could pick. That would be the dopest thing. Just, all right, cool. All right, I'm going to pick C this year. All right, I want to go C. I like this one. I'm going to go A. That'd be amazing.
Yes.